Hey, Stan The Annuity Man, America's annuity agent, licensed in all 50 states. That includes yours. Author of 7 books on annuities. 6 of them I'll send to you for free. Why not 7, Stan? Because I'm rewriting that one. It's called the Annuity Stanifesto. It was the original one I'm rewriting, but the other 6 owner's manuals I will send to you for free if you go to theannuityman.com. So average retirement income, how can annuities help with that? Obviously, annuities can help because they're the only product type on the planet that provide a lifetime income stream that you can never, ever outlive. But what's the average retirement income? I read something the other day where the average income stream in America, currently at the time of this taping, I guess the date's above me somewhere, is 2-income family, $55,000 a year. Seems about right. You know, you might think that's low, you might think that's high, but I think that's what I just read. But let's dig into how annuities can help, why annuities should be part of your overall income floor plan. What is an income floor? And then how you can plan for the future as you go to chapter 2 of your life, of living your life, living the dream, and having income hit your bank account. But we're not going to do any of that until we hear music, and the music starts now. As you probably know, I do all these annuity videos on the Stan The Annuity Man YouTube channel. I did one recently, how does a pension annuity work? You might want to look at. And why do I bring that up now? It's because we're going to talk about creating a pension, right? We're talking about average retirement income. You might want to know what that is. You know, what's the average retirement income? You might want to know that because, hey, I want to know if I'm doing better, if I'm doing worse, if I'm on track. I don't really think it comes down to that. I don't think it's a comparison that you need to make, my opinion. I think it really comes down to what you need. What are your expenses? And, you know, I talked about income flooring in the first part of this video, right before that neat music hit. What income flooring means is, what is the guaranteed income amount that you need to hit your bank account every single month that covers expenses? That's including some lifestyle, but, you know, your basic expenses, so you don't have to worry about it. Stuff that's not going to be affected by the markets, or by volatility or a geopolitical event. It's the income stream that's coming in, that pension type income stream. Now, what does that include? What's your income floor include? It includes Social Security, which is an annuity because it pays a lifetime income stream. It includes a pension if you're so fortunate to have a pension. That's an annuity that pays a lifetime income stream. It includes dividends or rental income, or, you know what else includes income floor? Your RMDs from your IRA, your required minimum distributions. You kind of have to lump into an income stream because that is providing income into your account. I know it's not pure income, it's not a purist definition, but it's money coming in. So money coming in, how much do you need? And then from that, so, you know, find out that gap. If you don't need to fill a gap of income, if you're like, hey, we've got it all covered, we got enough income, then great, you already own the best inflation annuity on the planet. That is called Social Security, because it just, you know, they raise that cost of living increase based upon political whims of our friends in DC. If you got the same type of cost of living increase with a regular annuity in the private sector, you're going to pay for that. Annuity companies don't give that away. In fact, visually, here's the annuity that does not have a cost of living adjustment increase. Visually, here's the same annuity with it. So they're not going to give that away. It doesn't mean you don't buy it, but they are going to price that in. And typically, we've seen it anywhere from 6 to 9 year break-even point. I know you can't say that carte blanche before our client base. That's kind of what it is based upon their age. So, you know, the average retirement income and how do annuities help? Annuities help because you can solve it a couple ways. Lifetime income is the primary way that people structure annuities. So, for instance, a person called me the other day and they said, hey, you know, we've got $4,000 in income coming in a month. We need an extra $1,000 to cover some expenses, some lifestyle, some travel. So we did a reverse engineer quote to solve for that $1,000 a month for both his life and his wife's life. And then we also structured it so that 100% of any unused money, if they happen to die early in a plane crash or a car crash or whatever, would go to their listed beneficiaries of the policy. The good news about like a joint life payment like that is if one spouse dies, the income stream continues uninterrupted and unchanged for that second spouse's life. And that's a good example of what I call income flooring. The question then begs is, okay, Stan the Annuity Man, we've got the $5,000 a month. What happens when inflation hits? Again, you have the best inflation annuity on the planet, which is Social Security. But if that's not enough to cover it, then you're going to have to go back in the marketplace and shop for a single premium immediate annuity, reverse engineering for that gap that's needed for your income. So average retirement income, I don't know. It depends on who you are. It depends on your lifestyle. It depends on your bills. It depends on what type of money you want coming in, and everyone's different. It has really nothing to do with net worth. I have clients all the way from $100 million net worth all the way down to no net worth, right? Or really small. It doesn't matter to me. It all matters about contractual guarantees and what they're trying to solve for. So some people might need $100,000 a year of income flooring, or $200,000 a year income flooring, and then somebody might need $20,000 a year of income flooring. Regardless, annuities can fill that gap contractually so that you can sleep at night, and you've transferred that risk, meaning transferring the risk to that annuity company to pay you for the rest of your life, regardless of how long you live. So the good and the bad about using annuities for lifetime income, with what I call annuitization products, which are lifetime income stream, irrevocable contracts. Those are immediate annuities, deferred income annuities, qualified longevity annuity contracts. There's no liquidity. I mean, you're going to get your money back if we structure it properly if you die early in the policy, but you're going to get your money back in payment form, not in a lump sum form. There are some annuities out there that you can just peel off the interest, like a CD. A multi-year guarantee annuity is the annuity industry's version of a CD, meaning that you could buy a 5-year multi-year guarantee annuity that pays an interest rate, say 3 or 4% or 5%, whatever the current rate is. By the way, we have a live feed of that at theannuityman.com. You can see the best rates for your specific state because they're regulated at the state level. But my point is, you might say, I don't want to tie up my money in an irrevocable contract. I don't want to annuitize the policy. We have a couple of answers for that. First is a multi-year guarantee annuity, which you just peel off the interest. So let's just say, for instance, you put $100,000 into a 5-year multi-year guarantee annuity, getting 4%, just as an example. Then you could peel off that 4%, get $4,000 a year, and never touch the $100,000 and be completely in control of that asset, and you're just peeling off interest. That's income. That's a good way to do income as well. You can also do that with what's called a fixed index annuity, which is another version of a CD. You could take that, whatever that gain is on that index option, and just peel that off and never touch the principal. You can also attach what's called an income rider to that, which is a future guaranteed income stream that you dictate when that income stream is going to turn on. Unfortunately, with that does draw down, subtract from the policy, but you have the opportunity and the option to shut that on and off if needed. I don't think that's a good way to do it from a principal protection standpoint, but you are in full control of that asset as compared to, say, an annuitized product where that income is going to flow, just like ripping the knob off a water faucet. That water is going to flow. With an annuitized product, that income is going to flow. With an income rider, most of them, majority of them, allow you flexibility to shut them on and off if needed. That's just food for thought. Bottom line with all of this, it's customizable. I represent every single carrier on the planet, or pretty much every single carrier on the planet, and we have the best annuity calculators out there that will shop all carriers for the highest contractual guarantee for your specific situation. So I would encourage you to go to theannuityman.com to get my books, my 6 owner's manuals, to listen to podcasts, to read articles, all that stuff to get educated. And if you want to set a call with us, you certainly can, and we'll speak with you one-on-one and be your specific one-on-one annuity advisor to put together a plan for you. So with that, thanks for joining me. I'll see you on the next Stan the Annuity Man video.